Hello, hi everyone. Alright, welcome back for another episode of the Stock Lighthouse Weekend Stock Talk. Right, firstly, thank you very much for coming back and watch another video that we have for this week. Alright, okay, I hope you like the previous week's videos and thank you for your support for watching this. Alright, so let's get started. Alright, okay, so before we actually dive into it, okay, if you're new to this channel, alright, please click on the subscribe button on our YouTube channel. Alright, okay, and as well as clicking on the bell button so that you'll be notified of the upcoming video that we're posting up on a weekly basis. So a quick disclaimer, if this is the first time you're watching this disclaimer, pause the video, just read it through. If you've seen it before, you can feel free to actually fast forward it. Alright, basically just a quick disclaimer that whatever we share on the video is just for educational purposes, it's not a buy-sell recommendation. Alright, please do your own due diligence. Alright, okay, without further ado, let's get started. Okay, so what's happened last week in the US market? I mean, for the past 1 to 2 weeks, ever since President Donald Trump actually has mentioned that he's going to continue implement tariff of 25% of tariff on China. Alright, things has been going a bit south recently for the 1 to 2 weeks, and the most recent things that actually happened was just yesterday or the day before. Okay, Trump did mention that they're going to impose a 5% tariff in Mexico. Right, if Mexico choose not to deal with their immigration issue, right, so that actually add on another tensions to the global economy that actually exists between US and China. Alright, so that's one of the key worry. Actually, the key thing was actually back to China, alright, because most people will think that by actually US actually saying that they're going to actually implement tariff from China, China might be afraid, and after that come with a better deal to negotiate. But this time around things was a bit different because China decided not to back up from what they actually agreed with, and decided to go ahead to actually let US actually impose a tariff on them, and they're going to actually impose back the tariffs on US as well. So what has happened if you actually look at the US market, alright, price has been coming down recently, and as of this week closing market, alright, the S&P 500 has actually broke the simple moving average SMA 200-day period. Alright, this actually give us a sign that it could probably start to be turning downtrend because it had broke the 200 averages. Right, unless it bounce back up again, then we probably will see that it's just a short bounce and probably go up. So we're going to see what's going to happen in the weeks to come. Right, so there's a lot of worries, a lot of tension. A lot of investors are thinking at this point, what should they do? Are there any more opportunity to look at? Of course, given with the tension and uncertainty and volatility in the market, if you're unsure, uncertain, the best is actually just to stay out, hold more cash. Alright, if a better opportunity comes along the way, at least you have resources to actually deploy it when all these opportunities surface. Alright. But if you're a person who actually look at something that you want to shortlist and look into now, of course there are a few companies you still can potentially look at, it's just that they are lesser, so you got to be a lot more selective. Alright, okay, but as a whole, just keep things on a shorter term basis, or rather a shorter term perspective, because of all the trade war and uncertainty and volatility in the market. Alright. So what are some of the areas actually you can look at to pick up ideas, and where are some of the good stocks to look at it? Okay, so one of the avenue you can consider actually look at you can actually look at this thing called the SPY Spider ETF. Okay, basically what it means that you know that actually S&P 500 is made up of 500 biggest company in the US market under this in the S&P 500 index, right? And this index itself is actually further break down into different sectors, right? So this is one of the website that I actually look at it, alright? So you can just Google this website, select sector PDF, or you can just key in the URL, which is www.sectorspdr.com. Alright, so this is the breakdown of the sectors. You can look at it. Alright, it will tell you all the different kinds of sector. So basically, what you're going to have, you can look at it, you have actually the communication, consumer discretionary, consumer staple, energy, financial, healthcare, industrial, materials, real estate, technology, and utility. Alright, as of this video, we can see that the real estate and the utility has been performing pretty well so far. Alright, Okay, so what are some of the other sectors usually you can look at out of this by breaking down the whole S&P 500 into these few sectors, and then just ask yourself a very simple question. Alright, if trade war is really going to happen, which are the sectors or companies that are least likely to be affected? Alright, of course we know that for a trade war on this magnitude to happen, alright, whatever companies, whatever stock, it will sure highly likely you will go down. Alright, so what are some of the things you actually look at if you are still looking at opportunity to invest? Because not all companies are affected equally. Right, so what are some of the sectors you can look at? You can actually run through. In terms of telecommunication, you will know that it's definitely going to be affected because Donald Trump is going to implement technology because they have tariff on technology, and communication runs a lot on technology as well. So these are the companies generally will be affected. Okay, consumer discretionary, consumer staple. Alright, these two might be something you can consider because they are just consumers, consumer goods that they actually consume on a daily basis. Alright, energy is definitely one of the sectors that's going to be affected mainly because of the oil and gas. Okay, financial will be affected because we do know that tariff also doesn't just affect the whichever industry that is affected because of the tariff, but because of the slow economy, financially a lot of financial sectors will be affected because of the business operation they are using to actually support the consumers and the businesses. Alright, so how about healthcare? Healthcare could be something you can look at because no matter whether there's tariff or no tariff, there's trade war or no trade war, humans still need to survive. We still need medical support. We still need healthcare support. So this is sector you probably can look at. Of course, not all sectors of the healthcare are created equal, because some of the sectors, or rather the healthcare sectors company, are medical appliances or medical technologies company. So those kind of company will be affected as well because they are heavily technology based. Okay, so you need to actually dive deeper into what kind of sectors you look at it. So industrial material generally they will be affected because raw materials are affected. Real estate, it has been going up because you're just buying properties. Alright, technology definitely is affected because this is one of the key areas Donald Trump and China is fighting over because of the technology, particularly on the 5G. Alright, if not, the other one you can look at sector you can look at it is utility. Right, utility basically your electricity, your waters. These are the things that most people will need it, regardless whether there's trade war or no trade war. So these are the companies that will still continue to strike in a down market. Alright, so if you want, you can actually just click on it and go through it. So let's take a look. Let's take a look at XLU. Basically, it's the utility ETF. Here already can give you a brief definition of what are some of the companies that she comprises in these sectors itself. Alright, okay, and if you want to dive a bit more, there's a lot more information here about the ETF. Okay, but if you do not want to invest in that sector or the ETF as a whole, you can actually go even deeper by clicking on the holding. Look into what are some of the companies that are within this ETF itself. So here you go, you have a list of companies that is within the ETF or XLU. Yeah, so you can actually just pick. It shows the weightage as well. If you want, you can actually pick on the few top companies and then do your research about all these companies. Alright, so this is utility. The next one I'll probably look at is SLV, which is the healthcare sector. Alright, okay, so basically here already I mentioned is basically take care of healthcare equipment, supply healthcare producers, services, and biotechnology and pharmaceuticals. Alright, so you can actually look at the holdings of the company that is under this ETF. So you have a few big companies like J&J, Johnson&Johnson. I'm sure most of you know about it. United Health Group, Pfizer. Have many more companies that are pretty good and pretty strong in their fundamentals. Alright. The other one we can look at it is XLP, Consumer Staple. Okay, I will not really look at SLY. I'll rather look at SLP because SLP comprises of companies that actually do consumer products such as food, drugs, retailer, beverages, food, household products, personal products. Okay, these are the kind of companies that a consumer will still buy and consume. Probably just buy lesser, but they still have to consume on a daily basis. Alright, on their products and services. Right. Okay, so these are the companies that you probably want to look at. So these are the companies like P&G Propaganda, KO, Coca-Cola, Pepsi, these are the companies that most of us knows about it. And the other companies that we still gonna buy a shampoo, still gonna buy a body wash from P&G, right? To use even there's trade war or no trade war. Alright. Some of us who like Coke, we still drink Coke whether there's trade war or no trade war. Right. So these are companies you probably can look at to dive deeper to find opportunity out of the sector itself. Alright. So for this week, one of the company that actually caught my attention, alright, mainly because of the mastermind group that I was in. The rest of us were sharing. One of them was actually sharing about this company because of the news. So and then we actually dive into it and deeper. Alright. So the company that we actually look at it is actually, I did mention earlier as well, which is J&J, Johnson& Johnson. What happened to Johnson & Johnson is it just 2 days ago, right? Johnson & Johnson actually got into a legal case again because of one of the painkiller they actually are be making have caused some issue with one of the athletes, right? And then who actually died. Yeah, the university football player, right? So because of overdosing on the drug they actually produced by the company, and they are suing the company because the company are actually downplaying the substances and the effects of the drugs itself. So they actually got into a lawsuit. That is one of the things that actually created a 6% drop on the share price 2 days ago. Alright, so if you look at Johnson & Johnson, okay, so if you look at Johnson & Johnson, the first thing you want to know about how this company, how fundamental strong are they, right? You can see that Johnson & Johnson in terms of revenue generation, alright, they have been generating quite a good healthy cash flow, constantly increasing for the last 10 years, right? In terms of net income, you can see that they are also consistently growing 5 figures up, or rather more than $1 billion, alright, of net income every year, alright, except for this year 2017, alright, they got into some one-off event that actually paid off quite a bit. But generally, you can look at it, their revenue are increasing throughout or fairly consistent throughout the year. Alright, they also generate pretty healthy cash flow, reasonable capex that actually allow them to have pretty healthy free cash flow. Alright, okay, so if you look at the company current ratio, pretty healthy, all above 1 throughout the past 10 years. And they are running pretty healthy lows on debt, okay, which is actually less than 0.5, okay, which is pretty good and pretty healthy. Okay, if you look at return on equity, it's fairly healthy as well. Basically, they are earning about 24 to 25%. Alright, in terms of ROE, that shows that the company are generally effective in deploying investors' equity out in the company to actually generate profit. Right, so if you look at it, Johnson & Johnson is a very, very good and very, very strong, long-lasting company. They actually have a whole list, a whole wide range of products they actually do. Alright, so unfortunately, for a company that actually produce a daily consume product for consumer, even having a pharmaceutical arm that actually produce drug, once in a while they actually will be caught in such issue where consumers or companies be suing them because of certain drugs or certain things that actually they downplay on substances, on the health benefit and things like that. So once in a while, they actually will face this kind of issue. In fact, before this previously, Johnson & Johnson actually got into another lawsuit about their baby powder that actually have in the long-term usage will actually cause cancer. Alright, so that actually create another big unfortunate event for them as well. Okay, so if you look at Johnson & Johnson's from a TA perspective, right? If you look at Johnson & Johnson on a TS perspective, you can realize that for the past 5 to 7 years, it's generally on an uptrend. And it's generally on an uptrend. Okay, so except for from 2017 to about 2019, 2 years ago, it has been pretty much moving slightly but sideways. And we do know that at this period of time, it mainly because a lot of tension created because of the trade war itself. Alright, a lot of uncertainty, pretty uncertainty. So this is part, if you look at it, this is part where actually US-China had actually, or rather Donald Trump has said that actually going to trade war with China, market panic, so there's a drop, then price went up after that, and until it hit here, where Johnson & Johnson will actually been sued by companies because of the baby powder actually baby powder actually will cause cancer in the long term. So price has dropped pretty a bit. So until recently, because of the new drug case, they've been sued, so price just dropped 2 days ago right again. Alright, so at this point of time, if you ask me how this is going to play out, if I look at the case earlier, did mention, because it's not just Johnson & Johnson. Alright, if you look at this, Purdue and Teva will be part of this law case as well. Alright, Purdue and Teva have actually outright have mentioned that they agree to actually do a payout, okay, to settle this case itself. Okay, so and you look at Purdue is actually paying out 270 million, and Teva is willing to pay out 85 million just to actually settle this case. So how about Johnson & Johnson? If you look at it, I just made an assumption. Let's say Johnson & Johnson is willing to pay something similar at 270 million, alright, to actually to settle this case itself. They admit that, okay, they have some negligence and they're willing to pay out for just to end the lawsuit. Okay, let's say they're going to pay out 270,000. Okay, so if you take a look at Johnson & Johnson's balance sheet, okay, as of last quarter 2019 March, okay, Johnson & Johnson has close to 17 billion of cash and cash equivalent, right? So if they just going to pay out 270, or even if I double that volume, I just make an assumption here, if you're going to pay out 500,000, alright, Johnson & Johnson is still fully sustainable in their business in terms of cash, because they have quite plenty of it. Alright, so it's definitely not going to be a very big issue. Once the lawsuit case is settled, with a wide range of products, Johnson & Johnson can just discontinue this product itself, and then over time, just focus and maintain on the rest of their product that are actually doing well and performing. Alright, so I think that this is just going to be a one-off event for Johnson & Johnson, but this create a good opportunity for investors like us. Alright, of course, it's not an absolute best price as of now, because price did came down with the current investing environment. Things have been rather negative and volatile. Okay, so what actually I'm looking at probably to consider is, if you're looking within a trend, you might actually want the price to actually come back down further down to actually hit on this blue area. Alright, on this blue line, that could be the first potential entry area if the price continue to trend up. Right, if not, you might actually want to look for the price to actually break this trend line, alright, or rather bounce out this purple zone area, which is actually the next support level, which is actually has seen price being actually broken and retested this area a couple of times. So it might come down and retest this zone all over again. Alright, but of course, if you are a very, very long-term investor and you believe in Johnson & Johnson, okay, you might actually want to look at on the week. If you look at the weekly chart, okay, on a very long-term basis over the last probably about 10 years, you'll realize that actually the price tend to actually bounce off, respect and bounce off the simple moving average 150-day period pretty well. Right, it has been bouncing off this couple of times over the last 5 to 8 years, around this range, around 8 years range. Right, so now price that came down a bit, it seems to have been cutting through this price point again. So in the next, if you're looking on a weekly basis, probably this in the next week, this could be area of support to actually to re-enter the market again on Johnson & Johnson. But this is a very long-term play, because we are looking on a weekly candle. So if this is what you're looking for, probably this could be an entry, okay, for you to look at the price action. Alright, so pretty much that's it for this week. Of course, just to sum it up, alright, the US and China market is still the main two power player in the current economy, and with their head on in the trade war, it's definitely going to affect a lot of confidence in the market, and consumers, or rather investors, has been actually talking quite fairly over the last years about how the market has been overheated and things like that. So market definitely going to be volatile. So if you are not comfortable in investing in the current environment, the best thing is actually to save up all your money in cash. If you have position in profit, you might actually want to cash out a portion of it, or at least liquidate out your capital so that you keep your profit running to minimize your losses if possible. Alright, if not, there's always opportunity. Of course, in such environment, it's just harder and rarer to actually find them, so you just need to look out for. Of course, the best thing is if there's nothing for you to execute on the trade, it's okay not to actually do anything. Alright, okay, so with that, I think pretty much that's the end of this week's video. Alright, firstly, thank you once again for watching this video. I really hope that you find this video useful, and this could be one opportunity for you to keep in your watch list to look out for in the next couple of days or weeks, and hopefully it turns out on a good trade. Alright, so look out for the key support area. Alright, just a quick one again. If you have not subscribed to the channel, please subscribe to it if you really like what we do, so that it gives me an idea, give me a confidence, and to know that you actually enjoy this video that I'm doing, and I will continue to do more for you. Alright, of course, with that, do remember click on the bell beside it so that you'll be notified of any future upcoming video. Alright, okay, so thank you very much once again for watching this video, and I hope you have a great weekend and great week ahead, and I will see you in the next video. Bye.